When many people think about investing, they imagine something exciting. Fast-growing tech stocks, cryptocurrency, the next big startup. But interestingly, many wealthy investors prefer something much more boring. In fact, some of the most successful investors in the world have built their wealth through simple, predictable investments. Hi, I'm Jay, and on this channel I'm always thinking about practical, easy-to-follow ideas that help people build wealth and financial security. Today we're going to talk about why many millionaires actually prefer boring investments, and why that strategy often works surprisingly well. Many investors are drawn toward exciting opportunities, new technologies, trending companies, assets that promise rapid growth, and sometimes those investments do perform well. But excitement can also create risk, because when everyone is chasing the same opportunity, prices often rise very quickly, and sometimes those investments become overvalued. Let's look at Jeff. Jeff decides to invest $50,000. He considers two options. Option 1 is a high-growth technology stock that everyone is talking about. Option 2 is a boring dividend company that sells everyday products and pays a reliable dividend. The tech stock might grow very quickly, but it could also fall dramatically if expectations change. The boring dividend company may grow more slowly, but it also produces steady income every year. Sally chooses a different approach. She builds a portfolio of dividend-paying companies and ETFs. Her portfolio generates a 4% dividend yield. If Sally invests $200,000, that portfolio could produce roughly $8,000 per year in dividend income. And if she reinvests those dividends, the portfolio continues to grow. Over time, the income increases as well. Alec takes a long-term approach. He invests $500 per month into dividend ETFs for 20 years. Assuming modest returns, Alec could accumulate a portfolio worth hundreds of thousands of dollars. At a 4% yield, that portfolio might eventually generate $15,000 to $20,000 per year in passive income. And the key point is, Alec didn't need to chase exciting investments. He simply stayed consistent and patient. Boring investments often succeed because they focus on consistent profits, stable businesses, long-term dividends, and disciplined reinvestment. Over decades, that combination can produce powerful compounding effects. And many wealthy investors understand that building wealth is often less about excitement and more about consistency. In investing, exciting opportunities may attract the most attention, but boring investments often do something more important. They quietly build wealth over time. So the next time you're evaluating an investment, ask yourself, is this exciting or is it sustainable? Because in many cases, the sustainable option is the one that builds the most wealth over the long term. If you want to learn more about building long-term passive income and financial independence, subscribe to Infinite Wealth Education. And remember, this content is for educational purposes only and should not be considered financial advice. Always do your own research before making investment decisions.